Hello and welcome to another update video about FETCH.AI. So yeah, it is getting rejected from our resistance area. We only yesterday talked about how nicely it followed the 20-day moving average. When it touched it, it rallied like 15 to 20%, which is something I highlighted to you in the video before yesterday. That, keep watching for this 20-day moving average. And anybody who entered a trade here when it basically touched the 20-day moving average, just sort of for the future, maybe I always recommend to move up your stop loss as soon as possible, as soon as you can, just because of this stuff. And because the underlying pattern still suggested it could be some kind of a B wave here, because we were still heading into resistance. Yeah, this is the resistance area relevant for a B wave. Just to explain the entire pattern. Overall, and that's just something to know and to keep in mind. The AI coins, due to their short price history and chart history, and the way that the chart is made up, they are not the most reliable patterns to chart. Okay, that's important to know. I still do it due to the the requests, and because I bought some AI coins somewhere down here in December or early January. I can't actually would need to look it up. I think early January. So there's the desire in the community to be informed, but they are not the best ones to chart really. And my view is that we're here now in a wave 2. Did highlight that a few times before, and the reason is that I can't really believe that the entire correction was adequate, which happened here, within just a few days, because the entire movement, if I zoom out a little bit, it started sort of down here in November. The entire movement took a few months to the upside, and a correction within a few days just is not adequate to correct this entire movement that took place over 3 months. Okay, typically not. So I think we have a little bit of a longer correction actually ahead of us here with all these coins, which is why it's a bit boring at the moment. But that's what it is. When you have impulsive rallies, which take 3 months, you typically expect maybe the correction to take 1 or 2 months as well. So that's where we are at the moment. And this move down looked very impulsive. So chances are this was an A wave within a larger ABC correction, which consists of an A wave with an impulse. Now here probably a B wave, and you can see how I showed you in the last videos here the resistance area, why it is where it is, because it's located between the 50% retracement and the 78.6 retracement, between 48.6 and 55.5 cents. So really only above 55.5 cents we can say that something much more bullish is going on, because until then it's B wave territory. So that's the neighborhood of the B wave, and B waves can do funny stuff. So you don't want to get too involved in B waves unless you have a clear setup maybe and you can manage your risk. But this is a clear corrective structure. This is not impulsive. In the very best case, you could argue that we did something like a 1-2 setup here, a 1-2 setup here, but then this one destroyed. This one sort of broke. So again, it would need to be 1-2, and then 1 A, B, possibly C. But the problem with that is this one came down too low. It didn't validate it, but it basically retraced like 99%. And this move up is very much like a 3-wave structure. You see it. So I'm more in favor of counting all of this as a corrective pattern, as I highlighted before, a B wave. That any rally needs to be considered as a B wave first, which means that you are facing headwinds, as long as we stay below the resistance area. Only above that, I would be in favor more of a direct breakout, but then I find that unrealistic at the moment due to the length of that structure. It's not long enough yet. And if we want to count what is the B wave? We have a corrective pattern complete. It doesn't need to create more waves. So this could be an A wave. All of this here, basically a flat pattern. A wave, B wave, possibly C or WXY here in a corrective pattern. And then here as well, we could say, so ABC, maybe this was the A wave. This could have been the B wave, maybe even some sort of a triangle, maybe not. B wave, certainly enough waves for a corrective pattern. And then a C wave to the upside within B, A, B, C. It's possibility. Looks like the A wave was a flat When that's the case, oftentimes the B wave is a zigzag or something different, and then the C wave. So could be done. It could be done. You know, we reacted certainly to our resistance area, which means we reacted to the 50% fib level, which is a B wave, a typical resistance or retracement area for the B wave. And if we now follow through to the downside further, so it would include here a sustained drop below the last lows. We already tried it, but it was all bought up. So maybe we're not ready yet. But it would be a drop below, first of all, the 20-day moving average here at 41.6 cents roughly. And then the last lows at 40.5 cents. And if we then we will have support around 36.6. And afterwards we should get into this larger support area, which is relevant for a wave 2, which would still be my preference, especially if I'm counting something as a wave 2. I'd like it to get into my support areas for a wave 2. It's just a more reliable count. And then if it gets in here and turns around, at least I know it's probably a wave 2. We're talking here about the area between 33 cents and 17 cents. This is sort of the area. It should not drop below 17. And if it does, then if it drops below 17, the whole pattern probably fails. Okay. That's my update about FETCH.AI. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.